since we concluded the mentorship program, we haven't really had an analysis using Elliott wave where I break down the chart and also show you guys what I think using this particular strategy. So by now, I am assuming that we have all gone through the mentorship program, and we have some insights on how to use Elliott wave. And some of us are already practicing this method, and you're already familiar with how to use it. So, but if you're not and you're new, you could basically check out the mentorship program. There was a mentorship program that was highlighted with some of the major factors and principles and laws governing this particular strategy that you need to be aware of, and why we use alphabets to represent the meaning of these waves. Okay, so some of these patterns are highlighted and are focused on certain parts of the chart, from the impulsive to the corrective. So you have to actually have this basic information before you're able to understand what is being done. That's why we did the program, and so people can be educated before we start making analysis using this particular method. Okay, so this is GBPUSD on the weekly time frame. So I was looking at this chart, and I said, okay, you know what? Let me make a breakdown using Elliott wave and also insights on smart money concepts, which I'm already familiar with, and I have also looked into. And I say, this chart is kind of aligning with Elliott wave and smart money concept, and I think I should make it available to the public. Now, if you look at this chart here, I'm currently highlighting a corrective wave. Okay, so it's from the mentorship program and from our studies, we know that WXY is a corrective structure. So that means that Elliott wave is trying to help us understand the trend. And since this is the higher time frame, it's easier for me to actually understand the trend of the time frame. Okay, so WXY is a corrective pattern, and looking at this, it does look like a consolidation, and price is currently in a corrective movement. And if you look at the pattern, which is being displayed on the screen, you can understand that currently we are in the third leg of the WXY wave. And although we could be wrong, and this is a bearish pattern, and price goes bearish from here, but at the same time, we are reacting off a major support level, which we are seeing confirmations on multiple time frames and multiple methods that this could be a bullish trend. So this is my reason for saying this could be a WXY corrective pattern on a wave Y, which is the beginning of the main trend. Okay, so let's go to the daily. Let's look at what the daily is saying. That is paying attention to what is going on here. Okay, so we can understand better how this plays a role as an area of interest, because if we were using smart money concept, we would just say this is a demand zone and this is the present demand zone, and we're expecting prices to do something like this, right? But using Elliott wave, we have to see logical wave reasons, wave structures to support that price could be doing something like this. Okay, so that's why we are going to the daily time frame to observe the structures within this particular wave. So this is the daily time frame, and on this time frame, we can see that yes, from the assumptions, this is an impulsive wave. Okay, because we have two types of wave: corrective or impulsive. So this is not in a sideways movement, so it's not a correction; it's in a trend, so it's impulsive. So we have to identify what is going on within this impulsive wave, and confirming this, we see that yes, if this is the height of the range of wave 1, wave 4 actually did not come below into the wave of wave 1. Wave 4 cannot retrace into the territory of wave 1, which supports that this could be an impulsive wave. And as you can see also, wave 3 happens to not be the shortest wave on this trend. Okay, so as you can look at this now, wave 3 is not the shortest. So these are two of the criteria we can use to understand an impulsive wave, and which is what we are using to classify this as a 1, 2, 3, 4, 5 wave. Okay, and then using market structure and smart money concept, we also say this is a change of character, right, from what we saw on the weekly time frame. And if you look at this from the structure point of view, and this would be the creation of a new range, which would be a break of structure to this high, right? So this would be a change of character, and this would be a break of structure. So that is using smart money concept and market structure. But right now, we are using what? Elliott wave. And now, when we see something like this happening, we're expecting a correction, which is the wave ABC, to return back into the discount level of the impulsive wave. So we're expecting price to return back to the discount level of this wave, which also using Fibonacci rules and extensions, you can draw that to see which level is significant enough for price to retrace into following this. Okay, so also the 61 Fibonacci level happens to outline this area of interest which we highlighted on the weekly time frame. You can see clearly that this daily structure and the daily wave we are seeing right now is in support of the prediction, and also this being a wave ABC retracement of the first wave, which using market structure, we agree that this would be considered a wave of structure of this range. Like I told you guys earlier, Elliott wave is something I use to understand the higher time frame to give me insights to basically what could be happening on smart money concept from a different perspective. Now, looking at this, you understand that this low could be seen as liquidity. If this was using smart money concept, this would be considered what? A demand zone. And that is using smart money concept to understand what's going on the daily time frame. Like I told you guys, Elliott wave is something I use on the higher time frame to understand the trend, and also then use smart money concept to get my area of interest. So if you understand this, then you understand why this is in line with what I have using smart money concept and how I use Elliott wave to analyze the market. So Elliott wave is something I use on a higher time frame to understand the weekly and daily, and then from there I go to the lower time frame to use smart money concept, which is seeing the imbalance here, this as an internal structure, this as a demand zone, and then basically expecting price to go below this low to get maybe a bearish entry, or this happening. So this is my overall projection of the higher time frame using Elliott wave, and then going down to the lower time frame to use smart money concept. So this is where we stop for here. I'm trying to make this as short as possible so you guys get an insight on how I use Elliott wave, and also to understand that I do still use Elliott wave. I just don't do more of the public analysis on that, since it's on the higher time frame, and the analysis I post are mostly on the 4 hours time frame. So that is already when I start breaking down things with smart money concept, and then you see most of the time I post using smart money concept. So thank you all, and that will be the end of this episode. Bye.